Hello and welcome to episode number 11 of Zach's Tech Talk Tuesday. My name is Ryan McQueeney, and on this week's show, I'm going to be joined by Brendan Ahern, a very special guest who will be chatting with me about the current state of the Chinese internet space. Brendan is the Chief Investment Officer over at KraneShares, a leading provider of China-focused exchange-traded funds and Chinese investment education. The company currently operates 5 different China-related ETFs and hosts a wide range of research and data. China's tech companies like Alibaba, JD.com, and YY are among some of the biggest and most powerful brands in the world. Their user bases are spread across the Greater China region and include billions of people. That means when the Chinese government starts cracking down on content and banning certain online activity, the tech world needs to take notice. Luckily, Brendan was able to join me to tell us what we need to know. Enjoy. Chinese regulators have been in the news lately, and it seems we're starting to hear more about the country's internet restrictions, or its so-called Great Firewall. Before we jump into regulation of web content specifically, can you touch on the overall regulatory atmosphere in China? How much control does the Chinese government have over its citizens' lives, and how are things different than here in the United States?
Yeah, thank you, Ryan. The Chinese rules and regulations about content and content delivery on the internet in China really reflect many of the conservative family values that are reflected in China today. So many of the restrictions are around, say, celebrities, about what can be kind of said, much more conservative than I think many Americans would appreciate in terms of reflecting those kind of family values that we see in China today.
Interesting. So shifting now towards more of a focus on that Great Firewall, can you speak more specifically about what kind of internet content that Chinese regulators ban or crack down on? I guess just to give us a better sense of, what the difference is between, Chinese family values and, the family values, the traditional family values that we hear about here in the U.S. Why is this type of content deemed inappropriate or unsuitable for consumption? And why is there focus on this specific type of content?
So, I think an example that we've seen would be, there's been a lot of talk about trying to cut down on celebrities. There was a lot of news, kind of gossip-type column on some of the local celebrities, and that was deemed not to be productive to the end, to the government, that they viewed that as something that was a distraction away from people looking at work, or not a productive use of one's time, something that conversely here we get a lot of that kind of celebrity news coverage. So we've seen a reduction in that type of coverage. So that would be kind of a recent example we've seen, Ryan, something very different than what we experience here in the United States.
Yeah, that's interesting that productivity would be the kind of citation there. You've touched on what we're seeing recently, and it feels like over the past month or so, I've seen news about a possible ban on the use of VPNs and, kind of more headlines related to this content crackdown. Why now? Is there something happening in the Chinese political or social climate that is making this come to the forefront today?
There is. Later on this year will be a National Party Congress, which is a very big event politically in China. Within China, we have a fairly significant turnover in political leadership due to mandatory age limits. So there is very much an awareness about stability in 2017. That's related to the economy, finance. There's a lot of regulatory scrutiny in general this year because this political turnover, the government really wants everything to go very, very smoothly. And that's where we've seen recently a lot more regulatory scrutiny on banks, securities, brokerage firms, insurance companies. We've seen a lot more emphasis on looking at overseas investments and what's the rationale behind that. So there's just a number of ways we've seen the government trying to make sure we just have a very smooth transition in power later on this year, and we expect that leads off to the second term of President Xi's leadership, in which we see a lot more reforms taking place in his second term, which will kick off later on this year.
Interesting insight there into an event or a kind of a shift that maybe not every American investor has an idea of. And I want to bring in our investing perspective more here. We've obviously got a number of publicly traded Chinese internet companies that are popular stocks over here in the States. Off the top of my head, I can think of Alibaba, Baidu, JD, Weibo, Sina, and YY. Have you seen this new regulatory pressure have any sort of effect on Chinese internet stocks?
Yeah, what we've seen more specific kind of single stock issues. So one of the things we've seen is online gaming is very, very popular in China today, and Tencent and both NetEase are major providers of online games, and there's been talk about wanting to potentially implement how much time a child can spend on the internet playing some of these games. And in the case of Tencent, they proactively went and said, we're not going to let a child, because you have to input, how old you are to play some of their online games, a time limit, and make sure that a child gets outside and plays and isn't stuck on a computer. Another example we had a few months ago was companies like YY and Weibo both provide online video streaming, and there was an interest from the regulator to understand how they could almost get access to, really live streaming, right? It would be very difficult to regulate. So there was short-term in those securities, so they certainly rebounded very quickly thereafter in articulating how they were going to allow that to take place. A year ago, Baidu ran into an issue around allowing paid search around health and not maybe displaying that a hospital or a doctor, when you searched, was actually a paid list to show up. And so the regulator really looked at Baidu and saying, this is, say, Google does here, they have to more explicitly show that. In the case of Baidu, they actually went back and said, we're not going to allow paid searches for anything health-related going forward. So I think in general, just as we see here, regulatory issues or potential political discussion affecting securities, that certainly can and does happen.
Awesome. Thanks for the insight there. I want to look ahead a little bit here as we wrap things up. What's your outlook on the state of the Chinese internet market over the next few years? And outside of regulatory issues, what, if anything, will be the major catalysts for growth or stagnation?
Yeah, I mean, we're very positive on this sector. We have the KraneShares CSI China Internet ETF, as well as within our KraneShares ZAX New China ETF. We own these securities in both of those exchange-traded funds. So why we're so positive is we believe these internet and e-commerce companies are the transmission engine for domestic consumption in China. As China's growing urban middle class moves up in terms of their spending abilities, they're not going to malls. They're leapfrogging over the big box retailer stage and going straight to online. And certainly we've seen that as we enter into earnings season for our portfolio. We're seeing very, very strong rates of growth thus far, as well as more recently retail sales in China for the month of June was reported at 11% year over year. So a real, I believe, validation of our thesis that Chinese internet and e-commerce companies are this transmission engine for domestic consumption, which increasingly takes place online.
Interesting. Definitely kind of a parallel to what we are seeing with never-ending e-commerce growth over here in the States as well. I want to thank you again for joining us. It was very insightful, as always, speaking to you about China and getting a little bit better perspective about the differences in the markets and cultures than we see here. So thank you.
Thank you, Ryan.
I want to thank Brendan again for joining us. And as a reminder, if you feel that we missed something or if you want us to cover a different story, shoot us an email at podcast@zax.com. Make sure to check out all of our other audio content at zax.com/podcasts. And remember to subscribe and leave us a rating on iTunes. As always, thanks for listening to the Zax Tech Talk Tuesday podcast. We will see you next time.